Hey there, and welcome to my channel, The Paper Bag Investor. Today I want to talk about the investment strategies of diversification and concentration, and try and ask the question, which strategy is better? So let's get into it. Before we go any further, I just want to make a quick disclaimer that I am not a financial advisor. I'm a guy with a paper bag on his head who loves investing and thinking about the future. And if you love investing and thinking about the future too, I encourage you to hit that subscribe button down below and follow along and become a better investor with me. But I want to be clear that everyone's financial situation is different. Everyone's financial goals are different. And I encourage you to do your own thinking, your own research, and make your own decisions with your own investments. So, okay, back to the topic, diversification and concentration. What is diversification? It's spreading out your investments to many different industries and asset classes. And conventional wisdom dictates that diversification is really essential to long-term investing success. You're often told to spread your money across a variety of stocks or asset classes to protect yourself from risk. And a lot of financial advisors will tell you to do this. You just go on the internet or on blogs or forums, people will tell you to do this. Family members will tell you to do this. It's considered the safe, conventional way to invest. Just spread your money out into a bunch of little investments or companies. That way, if one industry tanks or one company tanks, you're protected. And there's some truth to this, but in my mind, it's better to concentrate your investments if you've done the research and knowledge to back them up. And in my mind, if you really want to do well with your investments, have large returns, this advice to just spread your investments out every willy-nilly here or there, in my mind, this is very bad advice if you want to do really well with your investments, because in my mind, it's better to search deeply until you find one great opportunity than invest heavily in that opportunity, and all while checking your thesis and your assumptions from every angle. And Warren Buffett puts it really well, has a quote from Warren Buffett. He says, "Diversification is protecting yourself against ignorance. It makes very little sense for those who know what they're doing." And I think this quote from Warren Buffett really nails the point here that if you don't know what you're doing, then it's good to invest and spread out your investments widely. But if you do know what you're doing and you've done the detailed research, then it makes much more sense to concentrate your investments in what you feel are going to be huge winners. I'm going to show an image from Twitter that I saw the other day. I like this picture just because there's so much truth in one simple image. It shows knowledge increasing at the bottom, and as knowledge is less or very limited, then your allocation is all spread up and broken up into a bunch of little cubes, and as the knowledge increases, then it goes to less and less. And this is just a really great, really clear image of what I'm talking about, and I love it because it doesn't actually say you should diversify or not. It really just suggests it's based on your amount of knowledge. As your knowledge and conviction about a singular investment increases, your ability to allocate more and more of your portfolio to it also increases. And this is what I'm talking about when I'm talking about concentration. What this tweet doesn't show is that as you can narrow and concentrate your portfolio, your ability to make the highest gains occurs. And also, I want to back this up though too. Obviously, if you don't have clear conviction and you still concentrate your investments in a certain company, but you don't have the research and conviction behind it, you don't know what you're doing, and you're really playing with fire, and you could have huge losses. So really, as your concentration increases, the amount of possible up or down in your portfolio also increases, depending if you've actually done the research and gained the knowledge or not. So in my opinion, the key is to increase your knowledge. Always have a perspective that there's more to learn for you as an investor. There's more angles to look at something. There's more ways to look at your own investment theses and assumptions and to think, maybe I'm wrong about this, and just ultimately continue looking and searching. And to me, this is the absolute key to becoming a great investor is just gaining this knowledge, looking for more perspectives. Seeing how you can learn more about investing, how you can learn more about a company that you are interested in, and trying to see it really clearly with actual, what's true about it. Is it actually going to succeed or not? I'm not trying to put aside your own biases and see something for the truth that's actually there. That's what it takes to be a great investor. If you can do that, then you can concentrate your portfolio in just a few investments. And if those are great investments, then your portfolio can do exceptionally well over time. If you're getting value out of this video, if you're enjoying this content, I encourage you, hit that subscribe button down below. And while you're at it, hit that like button. It really helps me out. And I want to share one more quick story, though, of my own investing journey. I started investing in 2009, and for several years, my strategy was a little more diversified. I bought about maybe 10 to 20 different companies that I thought might be good companies, and I would hold on to them until they hit a moving stop loss that I had allocated, and would adjust those stop losses every few months. I did this, and it did well for me. I made about maybe 13 to 15% compound annual growth rate just doing this for a number of years. May have benefited that we've been in a bull market more or less since 2008. But overall, I had a bit more of a diversified portfolio, and that was basically my whole strategy. But in the last several years, my approach has shifted from just kind of picking 10 to 20 companies I think might be good to really trying to research and pick a select few companies that are going to be huge winners. And for the first company that I really had big success with this was being Tesla. And I was following Tesla as a casual fan since even before they IPO'd in 2010. But I had never put in the depth of research required to invest heavily in the stock until later on. And actually, the stock, I was following it in 2013, it shot up and did about, I can't remember, maybe 5x in a matter of months. And I thought I had missed the boat on the company. I was actually quite sad about that. I really kicked myself for a long time. But it wasn't until maybe 2017, 2018, 2019, I started researching Tesla more and more and started to realize, you know what, I don't think I missed the boat on this stock. I mean, I missed a better price back in 2013, but this company still could be huge, huge, huge and have a ton of room for growth. And so what I basically did is I just kept researching to see if some way I could be wrong. Because at the time, when I actually bought most of my shares was in 2019. At that time, many people in mainstream media, many people on the internet completely mocked Tesla as a company and suggested they would soon be bankrupt. It was right around the time Tesla was ramping up their Model 3 production, which was really difficult to ramp up that manufacturing. And there was so much negativity around Tesla at the time, which really caused me, concern as an investor if you're trying to make what you consider a large investment. But all these concerns just pushed me to research deeper and harder from every angle I could. If there's any kind of talk about Tesla failing or something wrong with their vehicles or some kind of problem with the company, I would research as deeply as I could from those specific angles to see if these criticisms really held true or made actual sense. But I found a lot of the criticisms didn't really hold up. They were more just naysayers or someone that hadn't really done, in my mind, a deep enough research themselves. And in the end, I had done so much research on the company, probably hundreds of hours of research on Tesla from as many different angles as I could find. And I felt actually such a strong conviction to buy the company, and that the market as a whole at that time was really missing a great opportunity. So I bought what for me was a significant amount of shares of the company at that time. And obviously, I'm very thankful I did. In this example, those shares went up 1,000% in the next year. And I still believe they have more growth ahead of them, and I've actually accumulated more Tesla throughout that rise of 1,000% rise. But I still think with my own research, I still think Tesla is going to go much higher. But that's for another video or some other videos I've done. But the key point I'm trying to make with this whole video and with this story about Tesla is that if you can do the research, if you can become a better investor and you can try and look at a company from many different angles and ask as many questions as you can about the company and try and see others' perspectives and criticisms clearly and see if they really hold water or not. If you can really try and do that and look at something, you can actually reach a point where you have so much conviction you can concentrate your portfolio into just a select few companies. And this is really where you make the biggest possible gains. But if you can't do this research, you don't have the time to, the interest to, then if you do concentrate your portfolio in just a couple companies, you can be quite dangerous and you're playing with fire really, because you could get burned. So just to hammer home the point one more time, the key is to be a great investor is just get as much knowledge as you can until your convictions are high, and then you can concentrate your portfolio. That about wraps up the video today. I wanted to hear from you guys. Let me know in the comments down below. Is there anything that I said that you really agree with or disagree with? Let me know in the comments down below. And if you enjoyed this video, again, please hit that subscribe button, follow along and become a better investor with me. And hit that like button as well while you're at it. That really helps me out. Okay, thank you guys so much for watching. Have a great day.